This week, 4 data releases, 4 clear signals, and they don't just bring numbers, they tell one story. A story many won't tell you. Pakistan is not just stabilizing, it's quietly rebuilding. Let's break it down. First, industry is breathing again. Pakistan's large-scale manufacturing just grew 6.45% year-on-year in February. That's not noise, that's momentum. Over 8 months, growth stands at 5.89%. But here's where it gets interesting. This isn't driven by one lucky sector, it's broad-based. Automobiles up a staggering 61.66%. Cements 11% up, a proxy for construction and infrastructure. Petroleum products, garments, sugar all rising. Even monthly data tells a story of resilience. Yes, there's a short-term dip, but zoom out, the trajectory is upward. This is what early-stage industrial recovery looks like. Uneven but undeniable. Second, the external account. Pakistan's chronic weakness is turning into strength. March delivered a $1.07 billion current account surplus. Let that sink in. This is not just a surplus, it's the second highest ever recorded, and it's not one-off. This is the third consecutive monthly surplus in 2026. For decades, Pakistan's growth story was held hostage by one question: can it pay its bills? Today, that question is being rewritten. Imports are rationalized, remittances are strong, the balance of payments is stabilizing. This is macroeconomic discipline, the kind markets reward. Third, the digital economy is stepping up. IT exports hit $413 million in March, up 21% year-on-year. This is the second highest monthly IT exports figure in Pakistan's history. Strip out imports and net IT exports stand at $360 million. Zoom out again, $3.39 billion in just 9 months, and the ambition, $10 billion by 2029. This is not just growth, this is structural transformation. A country long defined by textiles is now exporting code. Fourth, the capital is testing the waters again. Foreign direct investment surged 165% in March. Yes, the base is low. Yes, long-term inflows are still catching up, but context matters. This jump came despite regional instability, despite global uncertainty. For a country investors had written off for over a decade, even a flicker matters. Investors don't return all at once, they return in signals. This is one of them. What do these 4 data points really say? They say Pakistan is rebuilding its industrial base, repairing its external balance, scaling its digital exports, re-entering the global investment conversation. Now, is everything fixed? No, there are still structural weaknesses in machinery, in steel, in productivity, but that's not the story. The story is this: for the first time in years, Pakistan is not reacting to crisis, it is shaping a recovery, quietly, gradually, relentlessly. And here's the part many will get wrong. They'll wait for perfect data, but by the time the data is perfect, the opportunity will be gone, because recoveries don't announce themselves, they build in the background until suddenly they're undeniable.